Hey, what's up, guys? This is Juan Pablo from 100% Finance at 100%finance.com. Just checking in with you guys. I'm Mr. Passive Income, Mr. Cash Flow, Mr. Instructor, Mr. Mentor, Mr. Consultator. I don't think that's a word, but consultant. Just joking around. But I'm checking in to give you guys what you need to succeed, because as always, this is to your success, right? I want to see you guys successful, and I mean that. All right, so I just want to do a quick video. I always say quick video, but it ended up being 25 minutes each. I need to do better. All right, but I want to talk about no down payment money. So that's a dollar sign for money. Okay, it's not payments with an S, a cool looking S. It's no down payment money. How to do deals with no down payment money. I'm gonna make this video short and sweet and to the point. And I'm just gonna give you a few tips. Of course, there may be more than one. Oh yeah, let me mention this. People always wanna know one way to do 50 deals, right? With real estate and sometimes with business, it's not like that. Sometimes it's having 50 ways to do one deal, right? So you wanna have as much tools in your arsenal as possible, so that you can get the job done, right? It's like a handyman with a tool belt, right? He just doesn't have one tool and can do 50 jobs with that one tool, right? He can't use a hammer for everything. What he does is he has 50 tools, and at least one of those tools can do the job. All right? So I'm giving you some tools that you can use. There's more that are out there. It's up to you to get more tools in your tool belt, okay? So, how to get deals done with no down payment money. Number one, I would say number one, like 21. You know, if those of you who watch Juan, I guess you can see what I do in my spare time, right? Being I don't have a job. But hard money. What is hard money? Hard money are basically private lenders or institutions which lend money on distressed properties. They lend money to purchase the property, to acquire the asset, as well as to renovate or rehab the asset. And even provide you with closing costs based upon the ARV, the after repair value. Most of the time it's 65% of the ARV. So basically, a hard money person will give you money to buy it, fix it, and even close on the property. Mistake. If it's 65% of the ARV after repair value. So just to give you some numbers, if a house in a neighborhood which you found comparable sales comps knew that will be $100,000, a hard money lender, well, most hard money lenders, again I'm giving you an average because I don't know every hard money lender in America. They're all different. They're all private, so they all might have different standards. Okay. So what they'll do is they'll say, okay, if you can buy it, fix it up, and close for 65% of the after repair value, we'll give you all the money you need, no down payment required. Is that possible? Yes, it's possible. I've done 2 hard money deals that way in the market in Pittsburgh. I found a hard money lender who's just a regular guy who happened to used to do flips back in his day. That's all he did was do flips. So he has a bunch of dough just stashed up. So instead of him doing flips, going out there finding deals, managing rehab projects and stuff like that, he just figured out, I'll just be a lender. I'll just lend my money out at 15% interest and charge 5 points. Or no, I think he charged 2 points. I just lend my money out, get my return back in a couple months. Easy money for him. Very easy. Then you can find people out there like that. Very easy to find. Just go to Google, type in hard money lender, and type in the city or the market in which you want to invest. Hard money lender, Santa Fe or wherever city you live in, and some will pop up. And you can give them a call. Or just check your local RIA groups. There's some there as well. So a hard money lender will potentially give you all the money you need to acquire and fix up this asset with no money out of your pocket. Now that's 100% financing, which is the website, 100%finance.com. We teach you how to get properties with little to no money down. Using little to none of your own money. So, as I discussed, there are some downsides to it. High interest rates, interest only payment, high points, But hey, you're not using your own money, so why does it matter? So hard money is one tool. However, there are some hard money lenders in other markets where they do require a down payment, some up to 20%, just like a conventional mortgage. So how do you still get around that? You finance the 20% using the other means below. Either through partners, through lenders, using business credit or other forms of credit, which I should write here, or other forms. I'm just going to write other, which I'll discuss in a few moments. But you use that to finance the down payment, okay? They have less standards than conventional banks, like if you go to Bank of America or Wells Fargo, and they're very easy to negotiate with. So hard money. Next is seller financing, meaning you have the seller hold the note. You're not using a bank. So if you're dealing directly with a seller, you can potentially negotiate better terms. You're not dealing with a bank here. So it's like a person, just say I, Juan Pablo, own a single family house or apartment building, whatever the case may be, and I have no debt on it. Let's say I just own it free and clear, and you want to buy it from me, and you convince me that you will buy it, and you give me a certain percentage rate and certain terms, as long as you don't have to put down the down payment. I might agree to that. There's people out there who will do that, okay? So you can do sales financing. Or if you don't have 20% for a down payment, let's say you're buying an apartment building and you have to come up with the capital, just say $20,000. Let's say it's, just to make the math easy, you have to come up with $20,000 down payment because the purchase price is $100,000. And you might say, man, I don't have $20,000, but I know I can scrape $10,000 together. So you contact the seller through the realtor, if you're dealing with a realtor, and you ask them to hold a note as a second mortgage, a junior mortgage to the first note, to the primary mortgage company. So one mortgage company gets 80%. The seller who's selling you the property holds a note for 10%. And then if you were smart, you might negotiate interest only, payable in a couple years or so. And if you were smart, if you bought it with equity built in, you know, if it's worth, you're buying it for $100,000, but it's worth $130,000, you have instant equity built in, then you can do a cash out refinance in a year or 2 or 3 and pull the equity back out, still hold and own the property, and then you pay off the junior mortgage. And that's basically you got your down payment money back. All right, so you can use seller financing. It's another tool. Another tool is leverage something. Some of you may have houses that you live in now with equity. Get a home equity line of credit, and you can use that to finance a down payment. So yes, you're putting money down, but it's not your money. It's something called equity that you're using, and you're getting a loan off of it. You can use that, or you can use what I've used in the past is I own a car free and clear, and I got a car note on it, and I use that capital from the car note loan. That's my down payment money, and then that asset end up paying off the car note, and I still own the asset, and I'm still getting monthly rent off of that. Just leverage something. In order to do that, to see what you can leverage, you have to fill out your personal financial statement to see where you stand financially. You need to know your balance sheet. That way you can determine your net worth. You need to see your income statement to see what discretionary income you have left over after all expenses are paid that you can use for investing. If you want that, go to our valuable resources page. At the bottom, it has something called free documents, and download the personal financial statement. It's Excel spreadsheet. It has about 3 or 4 different documents to it. Again, a balance sheet, I think cost of capital, income statement or profit and loss statement, whatever you want to call it. So you can fill it out. And then once you fill it out, it's an eye opener. You'll see what you can leverage, or you see what you have to work on, so you can eventually leverage it in the future. Next thing, partners or lenders. If you don't have the down payment, have someone else provide the down payment. Like people say, it takes money to make money, but it doesn't have to be your money. It could be someone else's money. It could be a partner's money. That's the point of a partner. They're bringing something to the table that you don't have. They're strong where you're weak. Okay, you're strong because you found the deal. You're strong because you know how to analyze the deal. You're strong because you know how to close deals. You have the resources, the network. You have the knowledge, the expertise. They have the money. So you give them a little piece of the pie. You give them some equity, you give them some cash flow. Okay, that's a partner. A lender is different. A lender, they're just lending you money, and they have no equity, no stake, no ownership in the entity to own the property. You issue them a promissory note. And if you go to valuable resources at 100%finance.com, we have sample promissory notes that you can use. Okay? And again, you should use your own attorney to edit it based upon your market or whatever. It's just a sample. Okay? An edible sample in a Word document. So you can bring lenders into the table and offer them an interest-only payment. You know, if you bought it with equity, you could refinance them out, whatever the case may be. Or you can just pay them off within a certain period of time, principal and interest every month, or once a year, or every quarter. It's just whatever you negotiate, as long as the deal still works, and it's a win-win-win solution for everyone, that no one loses, especially not you. Okay? So bring partners or lenders to the table to finance the down payment. Business credit. You can use, not saying that it's legal. I'm not saying that. I'm not saying it is. But some people do it, right? Like someone said, it's not legal until you get caught. I mean, it's not, or something like that. I forgot the exact way they put it. But basically, just keep doing it until you get caught. Not saying I'm a proponent of that. I'm just putting it out there. But you can use, some people use business credit as well as credit cards to finance the down payments. And then they use the equity in the property that's built in and do a cash out refinancing year to pay off those creditors. Or what they do also is they might have lenders. The lenders finance the down payment of 20%, and they have a short, somewhat like a bridge loan, you know, transactional loan. They have like a short loan, maybe 3 or 4 months, 2 months maybe, and they'll say, I'll pay you, lend me this money and I'll pay you a high interest rate. And then what they do is they use they use the lenders to finance the down payment, and then once the deal closes, then they use business credit or the credit cards. They pay off the partners. So that way they're not using business credit or credit cards to finance the down payment. Okay, they're using private money people, private money lenders, and once the deal closes, they pay them off quickly to business credit. As long as the deal still cash flows, right? Who cares where the money comes from? Okay, so that's it. And if you're interested in business credit, go to 100%finance.com, go to valuable resources, as well as hard money if you're interested in receiving hard money. If you like the private, if you like to have the promissory note as well as the personal financial statement, all these items are found on the valuable resources page at 100%finance.com. And make sure you send me an email if you have any questions at 100%finance@gmail.com. That's 100%finance@gmail.com. All right, people, this is to your success. Go out there and do some deals, and don't let a lack of down payment money stop you. We're being a successful real estate investor. All right, I'm Juan, Pablo. I'm out. Peace.